President Trump recently said on Truth Social that it's a great time to buy, and he said that just before removing reciprocal tariffs and a huge stock market surge. Some have said that this is market manipulation or that it allowed insider trading by government employees. So we'll look at whether those claims stand up, but more importantly, we'll also look at whether now is a great time to buy. Now, if you do enjoy this video, please like it, and why not subscribe to our channel? Let's begin with Trump's posts on Truth Social. So if you cast your mind back all the way to April the 9th, this was at the height of the uncertainty around tariffs in the United States. This was a time when there were very broad tariffs across a wide range of countries, some of which were extremely high. Furthermore, there had been a big stock market sell-off. So in the morning of April the 9th at 9:33 local time, Trump posted, "Be cool, everything is going to work out well. The USA will be bigger and better than ever before." And then 4 minutes later, he posted, "This is a great time to buy." And he also put his own initials after that, which suggested that it was actually him that wrote the post rather than some of his staff. Now, there are two ways you can interpret these posts. The first one is that he could see the turmoil in markets and he was trying to reassure people. The second interpretation is that this was a heads up that he was about to roll back the tariffs and there'd be a huge surge in equity markets. And of course, later that day, that's exactly what he announced. Now, in order not to lose face, I think he started off by saying that he was going to impose tariffs of 125% against China. But then in the last sentence of the post, he says, "I've authorized a 90-day pause and a substantially lowered reciprocal tariff during this period of 10%. Now, both of those were effective immediately, and markets absolutely loved it, just as they'd hated the previous set of tariffs. And equity markets surged. At the moment, we're being bombarded with news flow about tariffs, but also how it's affecting markets, and it's very difficult to make sense of it. But in order to help you do that, we publish a free weekly market roundup, which deals with the most important stories going on right now. For example, this was our coverage of Trump's posts and the market reaction that followed his rollback of the tariffs. And as it turned out, it's likely that the movements in the bond market were what made Trump decide to roll back the reciprocal tariffs after all. So if you do want to sign up for that, it's very easy. Just go to our website, PensionCraft.com/newsletter, and you'll find a link to that in the description below. Now, this is the QQQ ETF, which is a tracker for the NASDAQ 100 index. So this is a tech-heavy US stock index. And you can see those two posts early in the morning close together, 9:33, 9:37. Then 4 hours later at 1:18, you can see the tariff pause post, and you can see that the QQQ ETF essentially goes vertical at that point. So is there the potential for insider trading as a result of this announcement? Well, to understand insider trading, and this is something that's drummed into you almost every day if you work at an investment bank, you have to understand the principle of material non-public information. The word material means that it's market moving information. If someone hears this, they'll go out and buy or sell stock. The second part is about non-public. What this means is that this is information which has not been disseminated to the public through official channels like press releases or company announcements. Now, make no mistake, if you go against these rules and you trade on the basis of material non-public information, you can go to prison and face huge fines in the US. For example, the criminal penalties could be a prison sentence of up to 20 years and or a criminal fine of up to $5 million. And for companies, the fine can be up to $25 million. There can also be a civil penalty where you have to pay up to 3 times the profit gained or the loss avoided as a result of the insider trading. Now, you might think this is just for employees of investment banks or financial companies. Not so. The Securities and Exchange Commission is very clear that it also affects government employees. If government employees trade based on confidential information they learned because of their government role, they'll be subject to exactly the same criminal proceedings as someone who works for an investment bank. It even extends to political intelligence consultants who may tip or trade based on material non-public information that they obtain from government employees. So whether you get that information directly or indirectly and act on it, or tell someone else to act on it, the repercussions can be very severe. Now in 2012, the US government passed the Stock Act, and this explicitly prohibits insider trading by members of Congress and other federal employees. If they get material non-public information through their job, they can't act on it. And if they do, there will be serious repercussions. Although as far as I know, there haven't been any prosecutions based on the Stock Act so far. So the key question is, who knew that the rollback of the tariffs was going to happen? And did anybody trade on the basis of that material non-public information? Now, it could be that those posts on Truth Social from Trump were just talking about general principles that this was a good time to buy. Although it has to be said that if you look at stock tips from the Trump administration so far, they haven't been great. For example, Howard Lutnick, the United States Secretary of Commerce, said on March the 19th, said that the Tesla stocks would never be this cheap. Sure enough, 2 weeks later, they were cheaper. So you could be forgiven for ignoring what the Trump administration tells you to buy. But here's an example of one of the social media posts that was making the rounds following the announcement and the huge rally. Now this is from the Unusual Whales account, and it's talking about the derivatives market. Now if you're going to act on material non-public information, you'd probably do it in levered form, because then you get a huge leverage gain, in this case about 2,000% over the space of minutes. If we zoom in on that graph, you can see the trading volume as the green bars at the bottom of this graph. Now notice there are 2 surges in volume. The first one goes with those 2 posts which occurred around 9:30 in the morning on April the 9th. Now clearly many people acted by buying these call options on the QQQ ETF. Then there was a secondary surge in volume after the actual announcement, although it was smaller than the first one. Now I don't completely buy that this was insider information. After all, you can see that the volume surge happens after those posts. And again, if you look at the QQQ ETF, at the bottom of this graph you can see the volume of trading for QQQ. That doesn't really surge during the course of the day. The big surge in volume happens after the announcement of the removal of reciprocal tariffs. So sure, if you buy a call option struck at 460 when the QQQ is trading at around 425, the option's going to be very cheap and the payoff is going to be huge. But that doesn't necessarily mean that there's been insider trading. So I'm not convinced that this was insider trading, but here's someone who is. He's a Democratic senator from Connecticut called Chris Murphy.
And so the question is, who close to Trump knew that he was going to suspend the tariffs? Which of his Mar-a-Lago friends or his billionaire advisors were able to capitalize on that inside information? Why did Trump send out that post to his supporters earlier in the day?
And he goes on to say that the bottom line is that Trump's tariff policy is very chaotic, so there's ample opportunity for insider information and furthermore for employees of the government to use that insider information to make boatloads of money. And he says this entire White House is one giant grift. So I'm sure there are going to be investigations to see whether there has been any wrongdoing. Although, as I said earlier, there haven't been any prosecutions so far under the Stocks Act. Maybe that's about to change. But now let's move on to a more important topic, which is whether President Trump is right. Is now a great time to buy? And I have to say I agree with President Trump. I think now is a great time to buy, but not for the reasons you might think. And I have to say it's not because I have insider information about what Trump's about to do. I doubt he knows what he's going to do himself. I think the question is framed incorrectly. It seems to suggest that the way to invest is by timing your trades. To illustrate what I mean by that, let's look at someone's entire lifetime in terms of their investments. Here you can see their birth, you can see when they go to work, and when they die. You can also see when they retire as that dashed white line. Now, it's not the case that you hold back cash from investment for almost all of your life and just have some choice points at which you go into the market. Maybe you do that if markets are very cheap, for example. That's simply not how most people invest very sensibly. What we normally observe over the course of someone's life is that once they start work, they start saving, and then once they retire, they start drawing down on those investments. Notice that this doesn't happen in chunks, it happens gradually, so that your pattern of investment and drawdown will look like this. Once you start work, you'll have extra cash which you can then invest, and then gradually over time, as your wage increases, you invest more. But notice what you're not doing here is holding back money from the markets in order to time your investments. You just steadily invest whenever the money becomes available. And then in retirement, you don't have control over when you sell, you have control over what you sell, but again, what you end up doing is selling steadily over time. So during that accumulation phase, every single time that you invest is a good time to invest. Sometimes you'll invest during a market crash when valuations are lower. For those incremental additions to your investments, yes, you'll tend to get higher returns because you're buying at a discount. But you'll never be able to predict what's going to happen to markets in the future or whether this will be a new low. So holding back your investments, assuming you can predict that, is a mistake. So here I agree with President Trump that now is a great time to buy, but any time is a great time to buy, as long as you do it on a regular schedule and you're disciplined about it. Furthermore, you also leave those investments to gain value over a long period of time. That's what leads to good outcomes. So I'm not convinced that there's been insider trading, but I'm sure that there's going to be some investigation to see whether it's happened. There's certainly a huge incentive for insider trading and also a great capacity for insider trading given these huge market-moving announcements which are coming out of the White House almost on a daily basis. But I think for the average investor, it's best to look through these hugely chaotic periods and simply stick to your investing plan. Most of the news flow that you're hearing right now is just noise. And if you are investing for the long term, then most of it is irrelevant. Now, if you did want to join our community to learn more about investing and the strategies which are most successful, don't forget you can do that very easily. Just go to our website, PensionCraft.com/membership, and you'll find a link to that in the description below. And, as always, thank you for listening.